All right, guys, we're gonna get started now. Sorry for the wait. We were just waiting for anybody who's trickling in. So thank you guys for coming out. I'm surprised at how many people actually showed up. So just to introduce myself, my name is Aditya, and I'm currently a junior finance major here at UT Dallas, and I'm with the Comet Sense program. And just want to check again, can you guys hear me and see the screen?
Yes, we can hear you.
All right, cool. So started introducing myself and I'll talk a little bit about the program. So basically what we do with Common Sense is we help students at UTD with their personal finances. So we give a lot of presentations like this over different topics like budgeting or credit today, other things like investing and saving up for retirement. And we also do one-on-one appointments where you can come into our office and sit down with one of us and we'll try to answer any questions that you guys have. So for today, we're going to be talking about credit specifically. So just to start with a few rules also, you guys can speak up if you have any questions or comments you'd like to make. But other than that, if you guys could keep your mics muted, then that would help a lot. And you can also send any questions in the chat if you have any too. So with that, I guess we'll get started. So before we start talking about credit, we'll talk about a few different ways to spend your money. The first is through a checking account, and this is probably a way that a lot of you guys are familiar with. Basically, you have an account where you store some money and you'll withdraw money from that account. You're usually using a debit card or withdrawing cash, and you're not going to have many fees attached to that account. And another way to spend money is through secured credit cards. And this is sort of like a hybrid between a credit card and a debit card because you'll put a deposit on this card and you'll have a credit limit on it. So that's the maximum amount that you can spend on it, but you'll still be able to build your credit score. So this is a great way to build up your credit score if you have bad credit and you want to start small. Another way to spend your money is through a savings account. So this is one that guys might be familiar with. So you put your money into this account and it'll build up over time through compound interest. And eventually you'll have a lot of money that you saved up that you can use for a future purpose. So on this website right here, it shows sort of how a savings account works and compound interest. So do you guys want to go there or do you want to move on? It's really up to you. Okay, so you guys want to move on, that's totally fine. So now let's start with credit cards. So there's a few different components that you might have heard of, might not have heard of when talking about credit cards. So the first is your interest rate, and that's basically the price that you're going to pay on your credit card loan. So let's say you have a credit card and you spent $200 on it. So the way that the credit card company is going to make money is through the interest that they charge on you. So it's sort of like a loan that you spent and then you pay interest on that. The next is any fees that you have associated with your credit card. So that's sort of like any startup fees or late fees, and there's sometimes some maintenance fees. It really depends on the card and the person that you opened it up with. The next is your monthly payment. So this is basically the amount that you'll have to pay per month based on how much you spent on your credit card. And generally, you'll have a minimum amount that you'll need to pay. So generally you'll have a minimum amount that you'll need to pay on this, but ideally you'd pay more than that just so that you can pay down your balance as fast as possible. And the last part is the credit limit. So this is basically the maximum amount that you can spend on your credit card. So if your credit limit is $1,000, let's say, then you'd ideally not spend more than that just so you wouldn't go over your credit limit. So there are a few different advantages to using a credit card. So the first one that's listed here is buying needed services using anticipated income. So what that means is that if you have something that you want to buy, that's weird. Okay, so if you have something that you want to buy and you don't have enough money at the moment, but you're expecting it to come in, then one thing that you could do is pay for it on a credit card and use the money that you get later to pay off your credit card. Yeah, could you guys please mute your mics if you're not trying to speak? Thanks. Sorry about that. So I'll just repeat that in case you didn't get it. So basically, what I mean by this first point is that let's say you have something that you want to pay for, but you don't have all the money for it up front. So one thing that you could do is pay for it using your credit card, and eventually, when your paycheck comes in, let's say you could use that money to pay off your credit card bill. So ideally, this would happen in only certain cases, and you wouldn't do this all the time. And it's a pretty good way to spend some money on your credit card and then pay it off later. The next advantage is to build up your credit. So one thing that you've probably heard a lot about is building up your credit score. And this is really important because when you have a credit score, it's looked at for a lot of different things. Like if you're applying for housing or if you're trying to get a new car and you want to get a loan for that, then one of the things that they look for specifically when giving out these loans is your credit score. So if you don't have a credit score, then it's actually sort of difficult for them to determine whether you'll be able to pay off that loan in the first place. And one other advantage is consolidating your bills. So a lot of times you might have certain expenses that you'll be paying for automatically, like let's say you have your water bill or your phone bill or even something like Netflix. What you could do is put it on a credit card and it'll charge your credit card automatically. And if you pay that off, then that's a great way to get those bills paid off without doing much work while also building up your credit score. But obviously, with the advantages, there comes some disadvantages too, right? So, one of the biggest disadvantages that a lot of people face with credit cards is that it's really easy to overspend just because, you swipe your card and you don't realize how much money you're actually spending. I know I've heard that there's sort of this psychological thing where people tend to spend more on cards than they do with actual cash. So, that's definitely one of the downsides with the credit card too, is that you might not necessarily see the money go away right away. The next disadvantage is obviously interest payments because when you spend that money on a credit card, it's not just for free, you'll have to pay it back in some way, and that's where interest payments come in. So that's where the financial risk comes in with all of this because if you spend too much on your credit card, then your interest rates could rack up a lot, and therefore you could get to a point where you're not able to pay them off. So you want to keep in mind and keep a balance between how much you're using on your credit card and how much money you can pay off with it. So I actually want to show you guys this website that'll help explain how this concept works. It's pretty interesting. So what I want you guys to do is, oh, first I'll explain it. So basically, there's a few different components. First is the balance. So that's the amount that you'll have to pay off. The next part is your interest rate. So the interest rate that's on your card. Then the payment per month. So how much you're going to pay towards that balance each month. So what I want you guys to do is someone text in the chat what they want the credit card balance to be. 300. Okay, let's start with 300. Five's too low. We'll start with 300. And for the interest rate, on average, they're like 18 to 20%. Yeah, there'll be time for an A at the end. We can definitely do that. Or if you have any questions, you can also type them in the chat. So for interest rate, they're usually like 18 to 20%. So I'll just say 20 for this case. And payment per month, how much do you guys want to pay per month? Someone say it in the chat. 50. Okay. So if we press calculate, if you guys can see this part, you'll see that if we pay $50 per month on the $300 credit card balance, it would take us 7 months to pay that off. And we'd have to pay $18 in interest. But let's see what happens if we half our payment to $25. So you'd find that it changes a lot because it would take you 14 months to pay that off and you'd have to pay $37, which is more in interest. Your principal still stays the same because that's the same credit card balance of 300, but you'd pay more in interest. So do you guys want to keep playing around with this or do you want to go back to the slides? It's up to you. All right, cool. Okay, so now what we're going to do is we're actually going to do an activity. So I'm going to give you a few different types of credit cards, and you're going to take a look at some of these questions. Like you're going to take a look at some of these questions, like what made you choose the credit card, why it's important to you, and how it helps you reach your financial goals. And before that, there are actually some questions, so I'll answer those. So someone asks, is the minimum payment amount just so you don't get a late fee? Yeah, so generally you'll have the minimum payment, which is the minimum amount that you'll have to pay towards your balance. But if you pay more than that, then that's great because then you'll pay down your balance faster. But you want to pay at least the minimum so that you don't get charged a late fee or more interest too. So going back to this activity, basically you guys are going to think about these questions and look at the cards on the next slide, and you're going to decide which one you would pick and why. So here are the different types of cards, and yeah, I'll give you a few minutes to take a look at those. All right, so I put some of the questions in the chat, but if you guys have decided on a card, you guys can actually also turn on your mic and share. So if someone types, I want to share, then I'll call them out and they can turn on their mic and share.
Yeah, I got a question. How do you know what you'll fall into for the APR rate? It could be anywhere from like 17% to 26%.
So I think it depends on previous history. So if you're opening up your first credit card, then it might be different than someone who's had a few already. And generally, it might depend on your credit score too, if you have one. So those are a couple of the things that they look at. Yeah, so APR, someone asked what APR is. It's the same thing as the interest rate. So the amount of interest you have to pay on your credit card balance.
So I have a friend that like they mess around with credit cards and they know how to game them. So in this scenario, if you try to like game the credit cards, would you just choose the Chase Freedom Unlimited, then use it for a year to get the 3% cash back, and then like cancel it after 1 year?
I'm confused what you mean by gaming the card. Could you explain that?
Uh, my friend, like, there's certain credit cards that'll give you like miles, and they'll like exploit the miles, or they'll like if you spend like $600 within the first month, it'll give you like up to blank amount of cash back or something like that. So they'll spend like 600, uh, and then they'll like yeah they'll spend 600 just exclusively with that credit card, and then they'll like get the benefits out of it, and then they'll cancel it or something like that. I'm not too familiar with it. Yeah, yeah. Emma said it very well. It's like opening a bunch of cards to get the best rewards.
Okay, so I kind of get what you mean by that. So I guess it's something you could do. I wouldn't recommend it because that could also it could affect your credit score if you're constantly like opening and closing different cards. So it really just depends on whether you're willing to take that risk or not. Did that answer your question though?
Yeah, thank you.
All right, so if you guys are ready, then we'll move on from this credit card comparison game. Oh, someone asked a question. Um, so someone said that their dad did that when he was younger, and it wrecked his credit score and had massive debt for years. So don't do that. So great lesson to learn from that.
Oh, okay, thanks. So,
Someone else.
quickly, like, what scenario or like what credit card would you take in this spot and why?
So honestly, when we were making this, there wasn't really a right answer. The point was just to figure out which one best fits you and the situation that you're in. Most people have picked the Discover student one just because that's a pretty popular one for students and a lot of people have it themselves. But there isn't really a right answer in this case. So there are a couple questions in the chat that I'm trying to answer. Okay, so someone asked, is it possible to make payments on a credit card without accumulating interest? So if you pay off the full balance right away, then in some cases you can just not pay interest because you paid off the full balance. And that's it for questions. So, okay, there's one more. Yeah, so someone asked, isn't cashback like a bad deal? Like, would you have to spend over 100K just to get a little over 1K back for free? It depends on the cashback thing that the card has, and there are different spending limits for cashback, so it depends on the card and what you're spending it on, and also your income too, if you're able to spend on that. All right, so I think we'll move on from this now. So next we're going to talk about credit reports. So what a credit report is, it's basically like a sheet with a bunch of information on you and your credit personality, I guess. So some of the things that it includes are some identification and employment data, so like who you are and where you work, and your payment history, so how consistent you've been with paying off your credit cards. Inquiries means like whenever you've checked to see your credit score or your credit report in the first place. And public record information includes some different things like foreclosures or divorces. Tax lien means you didn't pay your taxes. And also, bankruptcy is included too if you've had that on your credit report. So some of these public record things don't actually affect your credit score. So it really just depends. It's just sort of there for the person viewing it. See that some people have found some friends in the chat. That's cool. All right, so one of the biggest things that people ask about is credit scores. And these are basically found through credit bureaus who create the credit reports, and they're created by credit scoring agencies. So basically, the way to understand it is that these are the guys who make the credit report, which has your credit score, and these are the guys who came up with the scoring system in the first place. So FICO is the most common one, so that's the one we'll be talking about today. Another neat tip is that you can find a free credit report on this website, freecreditreport.com. And This is interesting because if you check your credit report too many times, then it can actually affect your credit score negatively. So this is a good resource if you just want to check it. So someone typed their credit score and they said they're not sure if this is good. What's a good credit score? We'll be talking about that later. Why is there a negative effect from checking your credit score? Uh, I'm not really sure exactly. I just know that if you check it too many times, it sort of seems like there may be a problem, like you're expecting some big purchase and you're seeing how that will affect your credit score or something like that. Basically, if you're too like anxious about it, then they don't like it that you check it too often. Okay, so now we're gonna be. Oh, sorry, someone had a question. Yeah, go ahead. Uh, okay, if you don't have a question, then could you guys mute your mics? Thanks. So now we're going to be talking about credit scores and the breakdown. So this wheel gives a good breakdown of what goes into your credit score. And we'll be talking about them from most important to least important. So starting with the biggest thing is your payment history. So this is basically if you've been paying your payments on time and paying at least the minimum balance. And like we talked about earlier, bankruptcy is one of the things that goes into calculating your credit score. So this is in the payment history section. And I put some green tips along the way for tips to increase your credit score in these different categories. And they come from this organization next door from State Farm. Basically, what they do is they help people with personal finances for free, and they have some free resources online. So I just included some of their tips that they've used for their clients. So for payment history, what they said is to pay up at least your minimum balance every term. And this is what we've been talking about earlier, just because if you don't pay that, then you'll have late fees and it'll also reflect negatively on your credit scoring. You want this ratio to be at or under 30% generally. And you can ask to increase your credit limit if you've been paying off your credit card and doing a good job at that. Then a lot of times you can ask for an increase so that you'll have a higher amount that you could use for this ratio. Someone asked when is a good time to ask. There isn't an exact good time. I just say after a while, if you've been consistently paying off your credit balance, then that would be a good time to ask. I can't hear anything. I'm talking. Can you guys hear me now? Okay, so it seems like some people can hear me, some people can't. All right, so how about now? Can you guys still hear me now? Does it sound clear or is it like messed up? Okay, cool. So our tip for credit utilization is, oh, we already talked about that. Okay, so next up is your credit history. So that's basically an average of your oldest and newest accounts. And there's a few different types. So there's obviously your credit cards, but also any loans that you've taken out, and even different types of credit cards. So there's like some with your bank and some with stores. So all those different types go into your length of credit history from no matter when you started them. So a good tip is that sometimes you might open up a new card and use that more often, but you still have an old card that you didn't close. So one thing that you could do is you could put automatic payments on that old card so that it continues to be used. Like we talked about earlier with things like some utility bills or like Netflix or something like that. That could be a good way to keep that old card active. So someone asked if you wanted to, can you calculate your own credit score? I don't think so because the way that these things go into this 30%, for example, is pretty subjective, but there are there are ways to check your credit score, so that's the only way you can figure it out from what I know. I don't think you can calculate it on your own. How long does it take for a new card to become old on your credit report after you open it? So it starts reporting on your report after the first month, like someone said. Okay, cool. So now we'll move on to the last couple things that go into your credit score. So the next one is your credit mix. So that's the different types of credit accounts you have. And the two main types that people talk about are installment or revolving. So installment is basically like a loan type of deal where you'll have a balance and you'll need to pay it down over time. Someone asked, how do you fix a bad credit score? We'll be talking about that later. So back to installment credit, this is basically like a loan where you have a balance and you need to pay it down. So like loans or your mortgage payment or car payments, those are some of the things that go into that. Revolving is basically credit cards because you'll have a balance, but then if you spend more on that card, then your balance will increase. So you generally want to keep that down as much as possible, but sometimes you may not have paid that down fully. So it just depends. So the tip for credit mix is that installment accounts will come over time. So for a lot of us as students, we're not necessarily going to have things like a mortgage payment or a car payment yet because we're still young and we don't have as high of an income in college, but those will come later and that'll add to your credit mix when you're older. So I saw a few questions. Let's see. If we don't use our credit cards anymore, does that affect your credit score? Yeah, it does because they're inactive. So, like we talked about on the earlier tip, you want to keep your old accounts active, or you could close them just so that it's not something you have to deal with. Okay, so the last part that goes into your credit score is new credit. So that's basically inquiries like we talked about earlier, checking your credit score over time. And also any recently opened accounts, so any new accounts that you've opened that go into your credit. And the tip that they have here is to check it quarterly and save a copy, just because that's a good amount of time to check it without having the penalty of checking it too often. And you save a copy just in case you have it for your records. And if there's anything wrong, then you have the information readily available. All right, so talking about credit scores, like someone asked about earlier, these are the ranges for credit scores. So generally, most people end up in this area right here in the middle. And we'll be talking about ways to bring your credit score up or to bring a bad credit score to a good credit score. So yeah, so if you go on freecreditreport.com, then you can check your credit score on there for free. There's a few other resources too. All right, so how to build up your credit score. Yeah, with no harm. Okay, so how to build up your credit score. So One of the ways that some of you guys were talking about earlier was just doing a minimal payment amount on that card and building it up over time, just so that it shows that you've had some activity on that credit card and that you're able to pay it off. So you could get a low limit credit card just because if it has a low limit, then you can't spend too much on that card in the first place. So if you're able to pay that off in full, then that shows that you can be trusted with the credit card and you can try to increase your limit and do other things like that to increase your score. Another thing is establishing a steady work record. So, like we talked about earlier, one of the things that's in your credit report is your employment history. So, if you have a history of getting fired a lot and jumping around from jobs, then it's not going to reflect as well as someone who's been pretty consistent over time. The next step is paying your bills promptly and on time. So, like we talked about, one of the biggest tips for credit cards is to pay at least the minimum balance, ideally more, and to pay it on time, just so that you don't have interest rack up on you or have many late fees associated with that. Another thing you could do is open a checking account and don't overdraft. So, overdraft is one of the biggest ways that, okay, y'all explain overdraft. So, what overdraft means is let's say you went to the grocery store and you had you spent $30 on groceries in Walmart, but you only had $25 in your checking account. So one thing that you could do is you could take out an overdraft to pay for that $5 difference. The problem is that when you do that, you'll be charged a really high amount of interest. So generally it's discouraged to take overdraft fees because it would be it would be a high amount of interest that you need to pay off for that loan that you take. So yeah, so overdraft fees is one way that a lot of people get a loan with high interest that they're unable to pay off, and that'll affect your credit score if you have that type of credit. So someone in the chat said, number one rule for credit cards is to always pay your balance in full. Interest far outweighs any cash back. I definitely agree with that, just because if you pay the full balance, then you won't have to deal with the interest payment. Okay, so some other tips to building your credit score is opening a savings account and making regular deposits, just because you can save up a lot of money and that can help to pay for any future expenses that you might have. Another way is to open a local store card and make regular payments, just because opening a store card is different from one that comes from your bank. So that goes into the credit mix, like we talked about earlier, the different types of credit that you might have. This one is applying for a small loan using your savings as a collateral. So basically, with this point, we talked about savings account and building up for a big payment. So you could use that as collateral, which is money that you have guaranteed to pay for that small loan. And this last one is pretty interesting, is getting a cosigner on a loan and paying that back. So one thing that a lot of people as college students have is that they'll open up a credit card and have their parent as a cosigner. So that's a great way to build up credit, because a lot of times you can default that payment to your parents and then they'll pay it off. But the tricky part that comes from that is that if they're not able to pay it off, then it goes back to you. So make sure that if you choose to do that, then you trust your parents with being able to pay off the bill. So someone asks, is there a significant difference between a 750 and an 850 score in terms of favorable loans? And there isn't really much. And I didn't say this earlier, but 850 is the highest credit score that you guys can have, but most people won't be able to maintain that forever, just because it's constantly fluctuating. So most people won't just have a straight 850 forever, and 750 is still really high. So it sort of depends. It won't really affect it too much in that scenario. All right, so how to fix your credit. So this is basically a lot of the things that we've been talking about: paying your balance on time, paying the minimum amount, paying down any debt that you might have, paying down past due balance. This is a big one because those have a lot of interest. And finally, this last one we actually didn't talk about is disputing any inaccurate information. Sometimes you'll find that there's a case where you'll get a call saying that your credit card was spent in New Jersey, but you haven't been to New Jersey at all. So you might be wondering what happened, but maybe someone stole your credit card info and you didn't make that purchase at all. So in that case, you'd want to dispute it and make sure that you got that money back because that's something that's really scary and dangerous too. So just keep in mind and keep track of your payments in case something happens like that. A lot of times the card company will call you themselves if they see something suspicious, but just keep in mind and keep track of your payments as well. All right, so now we're going to be doing another activity. So what I want you guys to do is take your phone if you have it and scan that QR code, and it should take you to this website that shows you how to estimate a person's FICO score. There's also the link right there that you can type in if you can't scan it. So with that, we'll start going through a few different scenarios of people, and we'll try to figure out their FICO scores and what they could do to increase their credit score. Oh, sorry, I didn't see your question. Oh, it said. Okay, so someone asked, when you first get a card, does your credit score start at a high number where you have to maintain it, or does it start low and you have to increase? And someone else actually answered this question. Thanks for answering it. It says that you start around 600 when you're thin file, quote unquote, with no interest, with no history. So, yeah, basically start around there in the 600 range, and it'll go up if you consistently make your payments on time. So it actually won't take as long as you think to go up to a high score, but the harder thing is to maintain it with whatever things that you have going on as you take on more cards or more loans and more payments that you'll have to make. So if you guys opened up the link, then we'll move on to the game. So the first one is Sam Spendthrift, and Sam's a college junior. He couldn't wait until he turned 21 so he could apply for a few cards. And here's some details about his profile. So these are some of the things that are applicable to Sam. And what that website will do is it'll actually prompt you with questions based on these things. And if you fill that out, then you should be able to get his credit score. So someone asked what exactly is a FICO score. FICO score is this thing that we were talking about earlier. So these credit scores, and FICO is the credit scoring agency that created this system and the breakdowns that we talked about previously. So with that website, you'd go to you go through the questions and fill these out based on it, and you should get Sam's credit score or the range of his credit score. All right. So have you guys finished filling it out yet? Do you guys still need some time? All right, so you should have gotten that Sam's credit score was in the 575 to 625 range. So going back to that picture right here, so he was in the poor range. So does anybody want to share some things that they think he could do to increase his credit score based on what we've talked about? Pay off his balances, yeah. Anything else? Pay off his debt, yeah, that's a good one. Quit applying for new cards. Yeah, because if he has a lot of new cards that he's opening up, then it's too many and it'll start messing with his score. What else? Uh, Close up the most recently opened one to bring his average down. Yeah, that's a good idea. Missed payments is a big one. So basically, those are a lot of things that you guys mentioned. Not going over your credit limit is good too. So with that, we'll move on to the next person. Okay, so this is Jessica Credit Smart. So Jessica's a college senior. Her parents gave her a credit card when she turned 17 by making her an authorized user on their credit card. So that's sort of like the thing we talked about earlier, where she was under their card and they co-signed. So anytime that she made purchases on that card, they were the ones paying off that balance. Oh, my bad. As an authorized user on their account, she benefited from their parents' diligent credit card habits, so they were smart about paying off their balances on time. She had a few student loans in college that she'll start repaying after she graduates, so we'll do the same thing, just refresh the page and go through the questions and try to figure out what her credit score is. Hopefully you didn't see it, I accidentally put it up there, but still go through it anyway just to see. And also think of some ways that she could improve her credit score if she needs to. All right, so if you guys did the exercise, you would have found that her credit score was in the range of 750 to 800, which is an excellent score as you see on the chart earlier. So some tips for her to improve her credit score. Honestly, there isn't much. Just make sure that if you're co-signing like she is with her parents, that you trust them, because if they're not able to pay off the credit card payment, then it goes back to you. And if you're not able to pay off that payment either, then it becomes a big problem that could easily decrease your score. So just keep that in mind. But overall, she's doing pretty good or great, I guess. So the last one is Danielle debt free. So she's also a college junior. She's been cautious with money and thinks all her friends with credit cards are crazy. She pays only with cash and debit cards, and while she knows she can handle credit cards, she doesn't want to ask her parents to sign off on one for her because she doesn't turn 21 for a few months. So this one's pretty short, but just fill out the questions on the FICO website and try to figure out Danielle's credit score. Yeah, so a lot of people are getting it already, but her credit score is that she doesn't have a credit score because there isn't much to go off of. She doesn't have any credit cards. She doesn't have any loans outstanding. So there isn't really much things to go off on the categories we talked about earlier for her to get scored in the first place. So, what are some things to do? Well, if she wants to start taking out loans for things like a mortgage or a car payment, then if she doesn't have a credit score, then it might be harder for her to find someone to give her that loan. So, having a credit score in the first place helps see that you're a worthy borrower. And it's not bad or good to not have a credit score at the moment, but you definitely want to open one up at some point just because it's a good thing to have when you're taking out loans. So, that was the last thing we were going to talk about. So now what we could do is some questions and answers. So a lot of people have been asking questions in the chat and people have been answering them. So that's really good. Thanks for helping out. So someone asked, how do you first decide upon choosing a credit card when you never had one before? What factors go into consideration? So I guess we could go back to the activity from earlier. So assuming that you're opening up when you're still a student, then I'd recommend at least choosing from some of the student options just because those fit where you are right now as a student and they'll also have some of the perks that best fit for you, especially like one like this where you get credit based on your GPA. So also just thinking about like ways to get the card. So a lot of times you might have a card that's offered through your own bank, so that might be most convenient for you. And just other things like how does it help you reach your financial goals? So that's pretty general, but basically what it means is based on your situation, what which card do you think would be the best for you? And like we talked about for these, there's not really a right answer. It's just more of what fits for you and what you're able to pay off. So if you choose a student option, then sometimes it might be closed, sometimes it might stay open and convert it into a regular card. It just depends on the bank and the card that you use. So what are some good resources to learn about credit and building credit? So we obviously have our Comet Sense website where if you go on there, we have some resources listed like the Cash course, which is free to UTD students that has courses over a lot of different things, not just credit. Also, this thing right here, next drawer from State Farm, they have some resources that are also pretty helpful, like some worksheets over different things that are. And the website that we were on earlier that was calculating the credit balances based on principal and interest, it was called NerdWallet. I also for personal finance resources. Okay, cool. So if no one else has any questions, and uh, just some final closing thoughts are that the Common Sense program is having a contest. So what we started is a new podcast called Change Matters. And basically, this is just some of us talking about different personal financial things and how it relates to students in general. So we started this podcast and we're looking for someone to draw a logo for it. So if any of you are art inclined and considering that we have a lot more free time on our hands, I recommend entering this contest and seeing if you'll win. We'll have some prizes like some UTD merch or Common Sense merch as well. So the deadline is April 15th. So you guys have about a week to finish that if you're interested. And you can email us right here at commonsense.ut.edu. So there were a couple of questions. I'll try to answer those and then let's see. So someone said there's a lot of resources for learning about credit cards. So how do you know which ones to trust? I guess I would look for like where it's coming from. Like some of the ones we've talked about earlier are great, but if it's associated with a big name like your bank or like for that one next door State Farm, like that's going to be a reputable source that you can trust. And some your bank websites might also have some resources that they have specifically, or you could also go on our website and we'll have some listed ourselves. But yeah, so with that, that was really about it. Thanks for coming by and watching. I'm surprised with how many people actually came out, but I hope you guys enjoyed it. And if you had any questions about the program in general, you could email us right here, commentsense@utdos.edu. And we actually did a scholarship drawing for today. So everybody who was here was actually entered for a scholarship drawing, and we picked a random person, and we're gonna do that right now. So if you wait a couple seconds, we'll announce who won the scholarship. All right, so the results are in, and our winner for the scholarship is Shruti. So if you could email commentsense@utdos.edu just send a chat to me of your email, then you we could get your information down and get you the scholarship. So again, thank you guys for coming out. I hope you enjoyed it, and we actually recorded this presentation too, so you'll be able to find it on our website or something once it's ready. And be on the lookout for any other presentations that are coming up. We're actually having a few more later this week. So we'll be sending those out to people on our mailing list. So if you're interested in joining that, again, email right here, commonsense@utdallas.edu. And if you have any questions, you can stick around. But other than that, you guys are free to go. Thanks so much for coming out. I hope you enjoyed it.